local currency last week recorded its biggest gain against the US dollar this year when it closed trading on Friday, gaining 7.8% in value over the dollar. The cedi's strong performance is a sharp contrast to what the market has become accustomed to over the first half of this year, when the cedi depreciated by more than 25% against the US dollar. I will be telling you in a bit what analysts are saying about this development. I will also be taking you to the stock and commodity market to aid you in deciding what stocks to look out for. My name is Eton Amsi and this is Business Live. This is where we take a critical look at pertinent issues affecting businesses and the economy as a whole. Let's begin the week with our business news roundup.
The local currency last week recorded its biggest gain against the US dollar this year. It closed trading on Friday, gaining 7.8% in value over the greenback. The cedi's strong performance is in marked contrast to what the market has become accustomed to over the first half of this year, after it depreciated by more than 26% against the US dollar. Meanwhile, the executive director of the Institute for Fiscal Studies, Professor Kwadwo Kusi, has downplayed the impact of Bank of Ghana's move to inject $20 million daily into the money market to stabilize the cedi. According to him, the central bank is refusing to tackle the real cause of the poor performance of the cedi against the major trading currencies. Finance Minister Seth Terkper has emphasized that government will not renegotiate the 3-year International Monetary Fund bailout program. According to him, Ghana is on track as far as the bailout terms are concerned, and it will be counterproductive to renegotiate. Economic policy think tank Institute for Fiscal Studies made the call, arguing government's performance in the 3-year IMF program could face serious challenges over the medium term if the program is not renegotiated. Airfare from Accra to the 4 main domestic destinations, Takoradi, Kumasi, Sunyani and Tamale, has gone up by some 17.5% following the imposition of value-added tax on all domestic air travels. The decision follows a meeting between the domestic operators and the tax authorities last week about the implementation of the tax that was approved by Parliament in the 2013 budget.
So the cedi has been appreciating recently. The ruined currency on July 2 made a 3.5% gain over the US dollar. That record was even better the following day when the cedi recorded a stunning 4.2% gain against its major trading partner to bring down the level of depreciation against the dollar to 20.4% from a peak of 26.2% on June 30. The local currency, after closing trade on June 30 at 4 cedis 3 pesos, bounced back to 4 cedis 1 peso the next day and finished the week at 4 cedis. Many have attributed the gain to the Bank of Ghana's move to inject $20 million into the market daily, among other measures. Currency analyst Kofi Ampa, while lauding government's efforts, is calling for a much more sustainable measure.
Central Bank actually promised that they are going to do that daily, and in support of that, they also talked about floating the short-term bonds to support the inflows. I mean, definitely they were going to float some 20 million, and they needed some backup, you know. So the central bank basically, knowing that they're going to be a daily inflows, is also encouraging that against the daily bond issuance, the short-term bond issuance that will targeted at foreigners to have a higher yield. Okay, so clearly it's a daily approach that the central bank is doing, and it's been quite significant. Since it started, the cedi has seen some level of very marginal level of depreciation. If you look at from the day of introduction on the 24th of June, for example, the cedi depreciated, the average depreciation was about 0.53%. On Thursday, that was on Wednesday. On Thursday, it dropped significantly to about 0.09% daily average depreciation, and then from there it's been, within the ranges of 0.01 to 0.20 daily average depreciation. It started on the year at an exchange, on the 24th last month, that's the 24th June, it was around 4.3. The average rate of exchange between the dollar and the cedi was around 4.3. As we speak now, it's around 4.1893. That's 4 cedis, 19 pesos. So significantly, there has been some level of drop. The cedi has been able to gain value against the dollar within the past few weeks. Yes, and it's all due to the 20 million injection, and also bringing back the confidence. We need a lot more people needed the confidence back to be able to calm down the panic buying that people were actually engaged in was something, I guess, it's been a little bit eliminated somehow.
Okay, so obviously the impact has been good. Is this the way to go?
Well, clearly in times in crisis like these, there are short-term measures, and these are one of the peculiar short-term measures that the central bank can apply to save the currency. If you look at this, the high depreciation values that we were recording, it was very, very heartbreaking, and it was really scary. So something needed to be done. And indeed, the announcement of the 20 million injection, and then the flotation of the short-term bonds to foreign partners was also very significant, and you could see its effect, clearly. So these are short-term measures, but if you look at the medium to long-term measures, that really matters, because one other question I guess you might ask is, how sustainable is this whole process? I guess we should move from one stage to the other. Now we've been able to bring the cedi back. We just hope that it can retrace to the 3 cities region, which is possible, but of course there are certain things that needs to be done to be able to retrace back to the earlier, the opening figures for 2015. It can be sustainable if we are able to have some inflows. Clearly, this can push us to at least to when we start having some inflows. Clearly some inflows coming into the country. So, but if all things being equal, if the things that we are expecting do not come, then it might not be sustainable. The central bank will pushing itself to the highest level. But, central bank was this whole approach is a very, very, very good approach, in the sense that the central bank knew that they were going to rely on their reserves, to push up the currency. However, then they introduced the short-term bond approach to also attract more foreigners to buy the short-term tenor. What it means is that they then can push that inflows, to support whatever they've lost. So then our reserves at least will still be happening, because we need a very good import cover to be able to support the import sector as well. So clearly it's a very smart move, but the sustainability depends on the programs and the policies that we might implement after here. So this problem that we've been facing as a country is something that has been occurring year in, year out. Since we did the redenomination of the currency, we've never seen the cedi, really gaining value from then. If you look at the cedi's rate of depreciation from then till now, it's about 99.9%. So it clearly brings us back to the basic structure of the economy. We seem to be, for the long term, there should be policies that will arrest the idea of importing everything into the country. I clearly talked about the fact of the deregulation that is happening now. The deregulation that is happening now will force more problems into the country. You recall in the days in the 80s and the 90s when budgets are being read, the last statement of the budget is the price of petroleum, if you remember. And everybody was waiting, every business person was not even paying attention to the budget that is being read. What they are paying attention is the last statement by Dr. Kwesi Botwe at that time, who was the Minister of Finance at that time, on his last statement, that is the pricing of petroleum. So when he makes that announcement, then everybody, now either readjust to pricing his products. And that time, if you recall, in 2000, before when we changed governance, inflation was around 40%. And we attributed those things to the fact that petroleum was a key factor, was a very important variable in every sector of the economy. So everybody will wait at the end of the budget to hear the petroleum price and then price himself. Now that's exactly what is happening now. Every sector of the economy is waiting as to hear what is happening in the petroleum sector to adjust its pricing. Now, if we continue like that, I'm not saying the deregulation is bad. I'm saying that the timing of the deregulation is not positive. Now, if you continue like that, everybody will have to adjust its price. Now, production or manufacturing companies will have to, the cost of production will go up. Now, when cost of production go up, prices of the commodities also will increase. Now, then it changes, or local people or domestic buyers can't buy the locally manufactured goods. So they'll look for imported substitute, which might be cheaper. Now, when they go do that, what it means is that now the local businessman who is always importing will have to now chase more dollars to go and import the goods into the country, because the local product is becoming expensive because of the deregulation and the petroleum prices always going up. Okay, now so then the local person who is doing his business now has market, because people are now changing to substitute goods that are cheaper, and these substitute goods that are cheaper are the imported products. So then they will have to now go and bring more of the imported products. If you do that, what happens? Your city now suffers, because a lot more people are looking for the dollar to import. Now, the other flip side is that then when they import, because prices are going up from the local producers, inflation will also go up, okay, because there'll be increase in petroleum product, people will be increasing their prices, inflation will also go up. When inflation goes up, this is an inflation targeting economy, so the central bank will come in and tighten monetary policy to check inflation, so interest rates will still go up. So it's going to be like a cyclical problem.
Professor of Economics, Professor Augustine Fosu, who also spoke to Joy Business, wants government to grow the manufacturing sector, invest in local producers, and encourage more exports as a measure to further support the city.
You have to remember that when you sell things overseas, you generate foreign exchange. When you import certain items, you have to spend your foreign exchange. So when the government in particular spends a lot of money, and much of that has to do with imports, sometimes you tend to blame the ordinary people for importing. But that doesn't change a whole lot over time. What changes a lot over time is how the government imports. Especially around the election time, the government tends to import quite a bit, so that it probably can win the election as it tries to satisfy its constituencies. In my view, that's one of the major problems that we have right now. How can we make sure that the government doesn't spend as much as it does as a way of maintaining the price of the city? It takes quite a bit of time sometimes, because you can do all the expenditures. It takes time for people, the economic agents, you call them, to think about it and decide, well, look, where's it going to go in? And if they decide that they've lost confidence in how the government is managing its fiscal affairs, then they decide to dump the city. That's precisely what is going on, because they have lost confidence in the ability of the government to manage the economy correctly. We have to really bite the bullet in this country. The government can, for example, not go along expanding tertiary education all over the country. Because once you build a school, I'm not talking about primary schools or secondary schools, I'm talking about universities. We don't need any more public universities in this country. We're having difficulty maintaining the ones that we already have. So why do you want to expand all these public tertiary institutions? It's a political decision, because if you put a university in a given region, presumably we're more likely to attract the votes. They need to win the election. But I hate to say too much about the what do you call the light health sciences university.
I just want you to explain that.
Remember that a lot of the products that are used to build this university come from overseas. Let's not forget that. And the government has to buy them to be able to build these universities. And then you pay teachers or professors in these institutions. They also use the funds to buy products. And many of these products are indeed imported. If the government does what it's supposed to do in terms of not thinking about elections and making an economic decision and making sure that it reins in all those expenditures, then I think the program will probably work. If the government doesn't do those kinds of things, the IMF is not going to provide the additional funds that it has promised. And I think that you're in for a rough ride.
What is the role of the commercial banks in further supporting the cedi? The central bank has charged commercial banks to discourage transactions in foreign currencies in order to boost the cedi. Chief Executive of Stanbic Bank, Alhassan Andani, however, says the commercial banks are only a pass-through agent and therefore cannot do much about the cedi.
The story about this foreign exchange actually is a two-way story. It's a supply and a demand story. When we talk exchange rates, people only concentrate on the demand side of it. Can you imagine that if suddenly there was capacity in this country for some, economic agents to export goods and services, how much wealth they would generate in dollars? You get what I'm saying? So whilst everybody would be complaining about the impact of the exchange rate on the supply side, we as banks, and we sit down here, who is out there with the potential, that we can help to roll in a lot more dollars so he can be rich in cedis. So whilst the supply side makes you poor in cedis, the demand side makes you poor in cedis, the supply side makes you rich in dollars. Nobody's talking about the supply side. And even if we talk about the supply side, we're talking about some IMF bringing in money or some donors bringing in money. That's not real sustainable supply side. We should be concentrating on exporters, real exporters, and saying that let's deal with the supply side and reduce the noise on the demands, because it's straight arithmetic on the demand side. It's straight arithmetic. If you're demanding dollars and we all demand dollars, if there's no supply, where is it going to come from? To say that IMF should bring it or to say that donors should bring it, if it's IMF, you ultimately pay back. And you have to pay back only if there's a supply side. You get what I'm saying? So I think that the argument, and I haven't heard that much argument around the exchange rate and its impact on the supply side. If you ask me, the impact on the supply side is to say, so if my cost of producing the goods and services in Ghana was 80, or let's say 100 cedis, and the exchange rate was $3, 3 cedis to the dollar. Today, my cost of producing is probably still 100 cedis, but the exchange rate is now at 4 cedis. Am I rich in cedis or not? Will I now be more encouraged to bring in dollars? That's the whole point. And we're missing that discussion.
There have been calls also for banks to reduce the use of the dollar and use more of the local currency, and for analysts who say this would also help in halting the free fall of the cedi. Do you agree?
Banks are basically, we are just pass-through agents. We don't do anything. We're just pass-through agents. You understand what a pass-through agent is? You bring me dollars and you want to take your dollars out. I give it to you. You bring in imports and you want dollars to pay for those imports. I'll try to buy dollars from those who have the dollars to sell and then sell it to you to pay for. So for us, there isn't that much we can do. And for us as policy, we will not lend you dollars if you don't have the capacity to manage the FX risk. And the number one capacity to manage FX rate is you borrow in dollars and you are actually earning in dollars. So there's no mismatch. Or if there's a mismatch, you have a natural hedge to your mismatch. You get what I'm saying? But back to the question as what can banks do? Banks are basically pass-through agents.
So we are at a point where we tell you what stocks to look out for this week, and Bertha is here with me. Hello, Bertha.
Hi.
I'm excited about the cedi. Briefly, what do you make of it?
Well, actually on Thursday and Friday we saw the city actually appreciating, but Thursday was where it's recorded significant gains against major trading partners on the interbank market and the forex market as well. But if you ask me, the major thing that is actually fueling this appreciation is the $20 million daily push that the government, Bank of Ghana, is actually pushing into the system.
Which is a good thing.
It's a good thing, but this morning I was asking whether this is sustainable.
Well, I'm sure most analysts are asking, but I'm sure the Bank of Ghana, they've got it all planned out.
Yeah, but this is a short-term measure. So what I would say is that it is a good thing, but if it is not sustainable, this is the time for them to come up with long-term measures to actually curb the city's free fall.
I agree.
And in the long term, not only in the short term.
Most analysts agree with you better.
Sure.
How did the stock fare last week?
Well, last week was not that good, though we saw the volumes of shares actually going up marginally as compared to what we saw in the prior week. We saw the major indices as the composite and the financial stock index actually going down. It wasn't that significant, but it was very high. Let me put it that way, because we saw it going up by 41.44 points, and then
so we have the figures
going down by we saw it on we can see it on the screen, and it also went down by the composite index went down by 27.71 points. That is representing 1.23% and then 1.85% respectively. However, starting the week positively, it closed the week with their year-to-date returns at 3.56% and 6.05% respectively. That is not quite impressive. Last week we didn't see good things on the market. And one other thing that we look at is the value of the exchange, how much the Ghana Stock Exchange is worth. And it also declined by 151.07 million Ghana cedis. And then we saw only two equities actually gaining.
Which
well, that is GOIL and then Art and Drugs. GOIL was expected. From our analyst view, we predicted that GOIL was actually going to go up by 4 pesos, and it closed the week adding 4 pesos to its week opening price, and that was a good one on GOIL. And Atin also went up by a peso to close at 18 pesos. That's 5.88% gain on its week open. However, the surprising thing is that we didn't see any equity from the other sectors actually losing on the market. They were all financial stocks.
How?
This was a surprise thing. We had 5 equities losing on their week open values, and they were all financial stocks. So this should tell you shouldn't be surprised why we saw the major indices actually declining on their week open levels. And the financial equities were not just normal financial equities, but the strong ones. GCB, EBG, HFC, Standard Chartered Bank.
GCB.
Yes, GCB actually was one of the equities that was doing so well, but I mentioned it here some time back that it's actually sentiment. We shouldn't be surprised if the equity actually picks up again. It has fallen so too much, but we shouldn't be surprised at all if the market, the equity picks up. Now, one thing about the stock market is that we don't actually look at, it is true that the market is not doing well. When we want to look at the real returns on the Ghana Stock Exchange right now, it's a very big negative. We were talking about this morning as well. And then because closing with an average return of 3.56%, when you take cedi's depreciation, and then when you take that of inflation and other indicators out, you realize that you've really lost much. But some of the equities are there that are still returning more than 20% to investors. So though the market didn't do well, but we still expect that some equities will yield to investors' capital.
Let's go to the losers.
Yes, as I mentioned, we saw EBG, we saw GCB, HFC, Standard Chartered Bank, and then we saw UTB losing on their week open values. And EBG actually lost 20 pesos, and it closed the week at 80 pesos per share, and that was 2.22% loss. And then we saw HFC being the top loser, losing 6.98% of its week open value. So these are the equities that actually lost last week on the Ghana Stock Exchange.
So what's the outlook?
Well, the outlook, anything can happen. Last week I mentioned that we shouldn't be surprised if the volumes of shares or the activity on the market continues to slow down. We wouldn't be surprised if that should happen this week as well. We are not expecting something significant unless maybe there's a bulk trade. And then we also want to inform investors that some companies are actually listening on the stock market. We have new ones that are listening on the Ghana Alternative Market, and that's one of them, or one which is currently on the market now is HOTS.
HOTS, yes.
Yes, HOTS. And
they launched last week?
Yes, they launched last week, and it's only 5 pesos per share. That is so cheap, and I'll advise every investor to take that opportunity and buy it now. You know, at the initial public offer, they don't charge. There's no commission charge. You buy it at the price and they don't charge anything.
And the minimum is 1,000 shares.
No, you can buy as low as 50 Ghana cedis.
50 Ghana cedis.
Yes, so
and that's 50 Ghana cedis actually.
yes, so that is a good thing. You understand?
It's a good thing.
So I'll advise investors that if you have never invested on the stock market, this is the opportunity for you to invest on the Ghana alternative market. That is with HOTS at 5 cedis per share.
5 pesos special, but
yes, 5 pesos special. Thank you.
Pesos. But I thought that is it? Do you still can you still get a share to buy? Because
sure, it's till 10th of July, so you still have all this time to buy shares of HOTS, and it's a good product. HOTS is a good. When you talk about brown, gold, and all that,
that's their flagship.
You understand? Yeah. So it's a good product. It has very good prospects, and I'll advise investors to actually invest in this equity. But we're still looking at GOIL maintaining its upward trend.
I'm excited about GOIL.
Yes, this week we're still looking at GOIL adding up to investors' capital.
All right. So I'm sure viewers, you know exactly what stocks to look out for this week. That's how we wrap up with today's edition of Business Live. I am Eton Amsi.